Hey everybody, this is John and welcome to the free video. And for today, we had a very quiet day. We had the minutes and we have the S&Ps. I believe they actually hit new all-time highs today, as did the NASDAQ. Okay, and if we look at the Qs here, we can see the Qs here getting their grind on, and of course the spiders as well. So is all well, is all well here? Well, if you look at IWM, it looks a little blah. If you look at IYT, which is the transports, a little blah. So you've got pockets of strength here like Google, which look, fantastic and look like they're holding up really well. And then you got like UPS, which is, in a downtrend. And in this particular market, I think that the hardest trade to do, and the one that's going to be the most frustrating, is an index play. Okay, so I'm going to buy the Qs. Well, maybe the Qs are a good example, but it's like I'm going to buy the S&P as well. On the S&Ps, you got one day where tech's up but energy's down, so you got choppy S&Ps. This is why the VIX is so low. And it just becomes imperative that this becomes a stock picker's market. So here, this is the kind of market where it's like, okay, great, UPS, I'd like to do a bearish position. If we rally back up to the 21, I'll sell a call credit spread or buy puts, and then I can go over here to Amazon and say, great, I'm just going to go with this because, I mean, every hedge fund on the planet continues to buy this stock. Or, like a Facebook, which is bouncing off of its 21 period moving average, or AMBA, which is gearing up, if I can type it in correctly, gearing up for a run into earnings, AVGO, gearing up for a run into earnings. So, again, I'm definitely more inclined to like buy strong stocks and short weak stocks, like buy stocks that are above the 21 period moving average, short stocks that are below it, and have kind of a balanced portfolio. In a perfect world, what happens is that on any given day, let's say like your long stocks are making money because they're doing well, but the short stocks are also making money because they're getting dumped. Obviously, that's not going to happen all the time, especially in an uptrending market. In an uptrending market, oftentimes the bearish stocks like UPS can get dragged along kicking and screaming, but typically what will happen is that they will, once they hit their resistance level, they'll roll back over regardless of what the market is doing. Okay, and that's the key there, regardless of what the market was doing. But more importantly, if the overall indexes get hit with some kind of a shock wave, then these positions will typically be good hedges for your long portfolio. Okay, so that's the kind of stuff that we want to look at there. After the minutes today, I was looking at the bond market, and it surprisingly just did a whole lot of nothing. If we look at TLT here, as I'm looking at this from a longer term perspective, I still look at this as they're just kind of consolidating after this massive post election decline, and the question is, are they going to retrace up higher from here or head back lower? And at this point, it's still it's still in hurry up and wait mode. All right, so that's what we got. So I'll be in the room bright and early tomorrow morning. One stock for those of you in the room I would like you guys to remind me about is STMP, stamps.com. We got this great squeeze going on. The question is how much higher can it go from here? All right, you guys have a good one, and we'll see you at the next update.